come inside the Bloomberg with me to this chart. You can see the Fed rate moves so far. The white line is the upper bound of the range, and the yellow line is the lower bound of the range. And in the middle, you see the effective Fed funds rate, where it trades overnight in the markets. And it always traded in the middle of that range until recently. Go all the way over to the right-hand side, and you can see, and if you were on radio, you could see, but it's a lovely color on radio, I'll tell you. But basically, that rate is trading very near the top of the range. And they're worried that if they go to the top or they go over the top, they lose credibility. They have the markets thinking they can't control monetary policy anymore. So we saw this in the minutes last time. They talked about this technical tweak that brings the interest rate paid to banks for keeping their reserves there 5 basis points less. Now, let me ask you, Scott, since you're in that market, is this a big deal?
Well, I think it's really telling, and that is that why? Why is this happening? And, you know, all the people I talked to in Wall Street talked to me how, you know, we had this massive rise in LIBOR, which occurred suddenly, and funding costs for the investment banks has gone up so much that they're just not willing to take on the same positions that they were before, because the interest rate differential between the investments they can make and where they can fund themselves is so narrow. And of course, on top of that, you put the huge amount of treasury bills that are being issued into the market. And so there's a lot of crowding out occurring, and I think that's what's being reflected
Some
here.
people are asking whether it's any kind of signal that the number of excess reserves is getting lower to the point where there's a squeeze and people need more reserves, and so the price has got to go up.
Well, I think that it's a good question, because I've had this debate before, is how tight is the Fed getting, especially since it's shrinking its balance sheet at the same time we're raising rates. My view is that they're choking off credit a lot faster than they think. You know, this is a symptom of it right here, that there aren't as many excess reserves as people think, because the banks need to hold these reserves because they're making loans.